All right, let's dive in. When you hear the words private equity, you probably picture a certain kind of world, maybe corporate raiders and hostile takeovers. But what if that whole image is just completely out of date? Today, we're going to get into how this multi-trillion-dollar industry is being totally reinvented from the inside out. We're going to use some fantastic insights from Neuberger Berman to do it. And here to guide us is our PE specialist, Mohammed Martin.
Thanks, Sarah. This slide really gets right to the heart of it. For decades, the whole story of private equity was about buying with debt. It was all financial wizardry. But that's the old game. The new playbook, that's all about building with data. It's a massive shift from spreadsheets to software, really.
Okay, so let's set the stage here. Before we jump into the future, we have to understand what made private equity so attractive in the first place. Mohammed, the traditional sales pitch has always been super compelling, right? And it really all boils down to one simple word: performance. Exactly. And this slide shows that difference perfectly. I mean, think about it. On one side, you have the public markets. It's like you're a passenger on a giant cruise ship, just kind of going wherever the market tide takes you. But with private equity, you're not a passenger. You're in the engine room with a whole team of mechanics actively tuning and improving the machine. That ability to get your hands dirty and make real operational changes, well, that's always been the secret sauce. So that's the classic model that built empires. But what happens when the ground completely shifts beneath your feet? Does that hands-on advantage still work when the entire economic landscape gets redrawn? That's the question that's been keeping fund managers up at night. And this chart shows the first domino that fell. For years, the private equity boom was fueled by one thing: cheap debt. Super low interest rates. When borrowing is easy, you can use a ton of leverage to juice your returns. But as you can clearly see here, that era is over. The rising tide of interest rates basically broke a key engine of that old model.
And you can see the immediate impact right here. The market didn't just slow down, it pretty much seized up. As the source material shows, the amount of capital being invested just plummeted, down 40% from its peak. All of a sudden, deals were way harder to finance, and buyers and sellers just couldn't agree on prices. The whole machine just ground to a halt. So the crucial takeaway here is that easy mode for private equity is gone. The old levers were all about riding market waves, You could use cheap debt, count on a rising market to sell the company for a higher multiple, a higher price relative to its earnings, and just let that lift your returns. But as you can see in the new reality, that's just not a reliable option anymore. High interest costs and brutal competition have broken those old tools.
And this forces a really critical question for the entire industry. If the old tricks just don't work anymore, what's left in the playbook? I mean, where are the returns actually going to come from now?
And the answer really is a fundamental reinvention of the whole private equity mindset. It's not just about the art of the deal anymore. It's about the science of the business. It's this huge shift from what we call financial engineering to operational engineering. Exactly right. This slide lays out the new game plan perfectly. First, specialization is everything. You can't be a jack of all trades anymore. You have to be a master of one. Second, and this is the really big one, it's all about hands-on operational improvement. This is the new engine for creating value. And third, firms are having to get way more creative about getting cash back to their investors. And this slide shows you exactly why that third point is so critical. I mean, think about it. Just a few years ago, holding a company for more than 5 years was pretty rare. Now, it's becoming the norm. The market for selling companies is so challenging that firms are basically stuck with their investments for longer. And that creates this huge problem. How do you give your investors their money back if you can't actually sell the company?
And that's where these really clever solutions like the GP-led secondary come into play. This has become a massive trend. So essentially, the private equity firm, the general partner, or GP, sells one of its star companies from an old fund to a brand new fund that it creates itself. This is brilliant because it lets the investors in the old fund cash out while the firm gets to keep managing a business they think still has a ton of room to grow. It's a piece of financial innovation born completely out of necessity.
Okay, so this new model sounds incredibly demanding. It's deep, it's hands-on work inside every single company. But how on earth do you scale that? How do you become an expert operator across a whole portfolio of businesses? Well, the answer lies in a new secret weapon.
This right here, this is the force multiplier. AI isn't just some buzzword in private equity, it's fast becoming the very core of the new competitive advantage.
And as this life cycle shows, it's being plugged in at every single stage of the investment process to create an edge, from finding a deal all the way to selling it.
Okay, let's see how this actually works, starting with finding deals. Traditionally, deal sourcing was all about who you knew. It was networks and relationships. Now, AI acts like this incredibly powerful telescope, systematically scanning the entire market to find hidden gems, companies that are a perfect fit for a strategy but are just flying under everyone else's radar. It's all about moving from that old-school Rolodex approach to a pure data approach.
Then you get to due diligence, which has always been this huge bottleneck, a really slow, painstaking process. Well, generative AI is a total game changer here. It can tear through thousands of pages of documents in minutes, instantly flagging risks, finding weird inconsistencies, and summarizing key info. And this doesn't just save time, it frees up the deal team to focus on the big strategic questions that really matter.
And this slide, this is where it all comes together. This is that operational engineering we were just talking about. AI isn't just a tool, it's the whole toolkit. Inside these companies, you can now use AI to optimize everything from supply chains to pricing strategies to deliver hyper-personalized marketing. This is where the real, tangible value is created in the new private equity world.
So, Mohammed, if you had to boil it all down for us, what are the new rules of the game for anyone trying to understand private equity today?
Yeah, there are 4 key takeaways. First, being a great operator now completely trumps being a financial wizard. Second, data and AI, they're the new competitive advantages. Third, because of this, the gap between the top firms and everyone else is just going to get wider. And finally, for investors, the most important question to ask a manager isn't what's your deal strategy anymore, it's what's your technology strategy.
Which really brings us to this final, pretty provocative question. As these private equity firms hire more data scientists than they do bankers, are they still finance companies? Or are they actually becoming tech companies? The lines are blurring fast, and the winners of the next decade are going to look very, very different from the giants of the past. A fascinating look at a world that is completely transforming. Mohammed, thank you so much for your insights, and thank you all for joining us for this explainer.